so good morning, everyone. Today we are so happy to have Hessert into our distance media room. Well, to say hello to our audience.
Hi, it's great to be here. Thank you.
Yeah, thank you for coming. Okay, our first question is, what's Paxos' mission and vision, and how is development of cryptocurrency and stablecoins? What's the core value of your company?
The Paxos vision is opening the global financial system to everybody. And our core value is really the heart of our mission, which is enabling the instant movement of any asset to anyone in a trustworthy way. And our approach to doing that at Paxos has been building infrastructure that's highly regulated so that we can serve enterprises, and because we think enterprises have a really important role in bringing billions of people into the digital asset ecosystem to interact with stablecoins and cryptocurrency.
Yeah, that's super cool. And Paxos is renowned for its high level of compliance. So could you provide an overview of the insurance mechanism for Paxos stablecoins, and how does the company ensure the security and transparency of assets backing the stablecoins?
Yeah, absolutely. It's really important to us. We think that to be able to reach mass adoption with these technologies and this industry, we ultimately need to work within regulatory frameworks, and we need to be compliant with the frameworks that are in place. And stablecoin has been an area where we have approached that really differently than most others in the market. You have other large stablecoins that issue their stablecoins in an unregulated way, meaning there is no single regulator that's in charge of overseeing that it's done in a way that protects the end customer. And that's kind of surprising because these other assets have reached large scale. But we think as we enter into the next phase of growth for stablecoins, where we'll enter into a world where we have trillions of US dollars, stablecoins, and other fiat currencies as well, that the regulatory oversight is really critical. What I mean by that is that there is a prudential regulator that is responsible for overseeing all of the activities behind the stablecoin issuance. For us, that's been the New York Department of Financial Services, largely regarded as one of the top financial services regulators in the world. And they have overseen the issuance of every stablecoin that we've ever issued, which is about 120 billion US dollars worth of stablecoins to date. And actually today, we've just announced an in-principle approval license from the MAS to also issue stablecoins with prudential oversight from our MAS regulated entity as well.
Yeah, it's really inspiring. So your recent collaboration with PayPal resulted in the launch of stablecoins. How do you view this collaboration and its significance in the context of the cryptocurrency?
I don't think you can really overstate the importance of PayPal coming into the market. They came into cryptocurrency offering Bitcoin and Ethereum, trading and holding in their 400 million wallets in 2020. And earlier this year, as you mentioned, they launched PYUSD, which is a dollar-backed stablecoin that's powered by Paxos. And what that means is, kind of in and of itself, is now you have stablecoins that are available to hundreds of millions of people in products that they know and trust. There are second order effects where now you have other large players, whether they're digital wallets or technology companies, saying, we need to integrate stablecoins into our products now because you have this leader in PayPal that's doing it. And so you're starting to see the proliferation of these types of support and integration across a whole bunch of different platforms. And we're happy to be the ones powering a lot of those integrations. I think as a result of it, we'll see new use cases and new levels of adoption over the next years, and really we'll look back and point to the moment when PayPal launched a stablecoin as being the catalyst for a lot of this new growth.
I see. So I was wondering how Paxos being involved in collaboration or research related to the cross-border payments or remittances?
We're spending a lot of time thinking about that with our partners. Paxos just operates at the infrastructure layer, so making sure that these are issued with the highest level of oversight and compliance so that anyone who's holding a stablecoin can trust it as much as they can trust a dollar in their pocket or in the future a different type of fiat currency. And the partners that we're working with are partners that are uniquely able to enable these types of use cases, like remittances, like cross-border payments. PayPal, just as an example, they have over 100 million customers that use their applications on a frequent basis in North America. We have another partner, Mercado Libre, which is the largest tech or largest e-commerce company in Latin America. Those are examples of partners that are starting to test these use cases of enabling cross-border payments, other types of real payment use cases with the Paxos stablecoins.
And how does the company perceive the potential of blockchain technology in the international payment sector?
I think that we view stablecoins as a new product of money. We're not creating new money, but we're delivering it in a new way. It's the same dollar. A stablecoin is backed one for one with a dollar that sits in a regulated entity and is held on behalf of the token holder. But now, instead of being in these closed systems, they're in open systems. And so that allows a handful of different things. It allows instant movement immediately. It allows global movements. It also allows real-time and fast innovation cycles with these stablecoins. So we see them really ultimately being used in all places that dollars and other fiat currencies are being used today. And I think we're going to have new use cases that we haven't seen operating on the closed systems of the earlier versions of digital money that we've been using.
Yeah, it's super grateful, yeah. So with the closure of many cryptocurrency-friendly banks last year, has this impacted the reserves held by Paxos in banks, and how does the company address this challenge?
Well, Paxos has always taken a very, very conservative approach to how we manage our reserves. And part of that is from just the philosophy and our risk management in the firm. And also part of that's because we've had a regulator overseeing us saying, this is what you can do with the reserves and this is what you can't do with the reserves. So earlier in this year, when you had some of the US banks, notably some of the ones that were really involved in the crypto ecosystem, either close or fail, some of the stablecoin issuers had huge exposure to those banks and really were just a bailout away from failing because they had billions of dollars. I think Circle had $3 billion of exposure to one of the banks that failed. Paxos didn't have that type of exposure. And I think we manage that type of exposure in a very different way, and we do it with regulatory oversight. So the disruption to the banking system impacts the operations of the business. Obviously, you have to spend a lot of time onboarding with banks, building a lot of banking redundancies, but it never put our stablecoin product at risk the same way it did for other unregulated players.
Yeah, considering the increasing strictness of the U.S. Towards cryptocurrency this year, how does Paxos perceive the current, the regulatory in the United States?
Well, it's been a tough year in the U.S. The U.S. regulators have been, in some cases, creating challenges for the industry through lots of enforcement. As we know, the SEC has brought charges against big firms like Ripple and Coinbase and Binance, and this has had a bunch of different effects on the industry. I think a couple of those are certainly some of the institutions that were ready to launch digital asset products had to step back and say, okay, we need to wait for some of this political uncertainty or the enforcement to pass. The other thing that has happened is for a lot of the international community and international markets that are building and doing a lot in digital assets, they really started to ask themselves, do we want our products based in U.S. regulated entities, or do we want it in international regulated entities? And in a lot of cases, we've seen our international clients saying, can you deliver us the same standard of oversight in a entity outside of the U.S. with different regulator. And so that is one of the reasons that we've invested so much in Singapore, and one of the reasons for the license that we just announced today.
Yeah, I see that. So recently there has been, in your opinion, how should stablecoin evolve in the future? Do they need to like more regulatory intervention, or should they just keep decentralized?
Well, I think that stablecoins means a lot of different things to different people. We think of stablecoin as a something that's supposed to be a dollar in a token format. And so to be a dollar, it means it's going to have to sit in a bank somewhere. It's going to have to sit in regulated institutions like Paxos Trust Company or Paxos Singapore. And we're going to hold those assets so that you know that they can always be redeemed in a seamless way, and that they're always available, and that you're always protected from any other activity or risks. And I think that for stablecoins, we need clear, consistent regulation so that stablecoins continue to grow. I think we're going to see an enormous growth in broader digital assets and in native cryptocurrencies that, of course, themselves will be decentralized. But when we talk about fiat-backed stablecoins, I really think the key to mass adoption is clear and consistent regulation.
Yeah, I think in recent years there has been a growing interest in the new stablecoin technologies, and this is my last question, such as the algorithm stablecoins. So the UST incidence is an example of failure in the space. How do you view their emerging trends and challenges?
This goes back to what is a stablecoin, and there can be products that are trying to track a dollar. They either do a really good job at it, or like UST, they do a terrible job at it, and they're trying to represent a dollar. What we think of as a stablecoin, and we think it's really important that these concepts are separated, especially when users start to interact with the products, is you're calling it a dollar, it should actually be a dollar, the same as a dollar in your pocket. And the way you do that is through full one-to-one backed reserved stable coins issued from regulated entities. And there can be a lot of exciting innovation, and I think it's really important that new projects and different types of things come to market, whether it's algorithmic stable coins or yield-bearing products, whatever it might be, but they're not stable coins. It's a different type of asset, and I think that distinction is important.
Yeah, thank you all for that insights and sharing. Thank you, Walter, for coming to our Distance Media Room. See you next time. Thank you.